you made it through COVID. You managed to bounce back from that, and now you're dealing with this inflation issue in a big way. What has it meant for your operations?
Well, it's the highest cost of goods I've ever operated in my 42 years in the restaurant business. By way of example, last year, cost of goods were 29.6% of sales. This year, 33% of sales so far. So that 3.4% increase as a cost is severely impacting our bottom line. And then we have labor right behind that as another huge cost increase we're dealing with on our cost front.
How much is the labor cost increase?
Labor is up about 13% overall, and cost of goods are up about 11% overall. So it's certainly something we didn't expect, nor do we need coming out as we recover from COVID over the past 2 years.
What does that do to your profitability? I mean, if you're talking about such big increases both in labor and in the cost of food that you're bringing in, those seem like they're probably the two biggest line items you might have.
Yeah, there's a couple of positives there. One, the labor cost itself is good for our industry. We needed to improve our wages, so I think that's a good thing overall. We can't price our way out of this. We are taking a little more higher pricing strategy as we go through. In years past history of the company, we've raised our prices 2% in the spring and fall. Last year, we took an additional 2% price increase in the summer, and we'll follow that same strategy this year. So at the end of the day, though, prior to Omicron hitting, we were up about 23% in sales over 2019. So we were experiencing robust sales. And I'm hopeful the remainder of 22 will see some of that same sales level. And that helps offset some of the impact of the higher prices in both labor and food, and all of our other supplies, by the way, are the same boat. So we can't price our way out of this, but with the increase in sales, if we get back to where we were with our price increasing, we can not maintain our profit margin, but with the higher sales and a lower profit margin, still glean a pretty good profit over the course of the year if all goes well.
Hey, Cameron, are you back at full capacity in all of your locations at this point? And what are sales looking like?
We are. We've got one more brunch to open up across the system, but and the problem with those, some of those reopenings is the labor, but labor has gotten better. We're about 95% of our normal workforce in the restaurants right now. So we've got a lot of overtime, and our productivities, though, is as high as it's ever been because there's no time for anybody to stand around. So it's not too bad, and we're certainly well better off than we were last September, October, for example, or July, August. So I'm feeling a little better about our labor position at this point.
You said labor's come back. To what do you attribute that?
Well, I think just more people getting in the workforce. The U.S. restaurant industry added 1 million jobs in January, which has helped. Like I said, we are close to our pre-pandemic levels as far as staffing goes. To me, it's not a problem. We were short-staffed and running tight pre-pandemic. So we're still, every restaurant is short 4 or 5 associates, and we're making do with overtime and a lot of hustle out there. So.
You always hear that the restaurant industry is a particularly difficult one, that margins can be razor thin. My guess is because you have so many restaurants, you've found a way to be a little more productive and have a slightly fatter profit margin. What are you talking about just in terms of profit margins, what you can operate on, what it takes?
Well, example, if we would normally run at 10% profit margin for the year if all went well in a good year. We think this year we might be at 7%, somewhere in that ballpark, 8%. So still profitable, but that's only due to the increased sales. I will tell you, if Omicron 5 comes along, et cetera, and we had depressed sales across the system or across the industry, we'd have rolling closures across the country. There's no doubt about it, because restaurants cannot survive with these increased costs if sales were either normalized or down. And so fortunately, sales are up right now. We have a saying in the industry here is sales cure all. So if we're getting the sales, we're going to be able to survive.
I'm guessing you and your staff must be pretty exhausted after the last couple of years. How are you all faring?
Oh, my goodness, yes. Like airlines, We have, if you're a restaurant manager in today's world, we have unruly guests. We never spent $1 on security in our restaurants prior to COVID, and now we spend about $750,000 a year on security.
Wow.
To protect our managers and our staff from some unruly guests that happen in our restaurants. Not all the time; it's a small proportion of them, but we still have them, and they affect the safety of our people, which is paramount to us.